Okay, where was I? I was in the middle of that strategy. I had to cut this out for a second. Um, so long and short position. So basically, if the thing starts climbing and then bouncing off of support, breaking through resistance, then coming back down and bouncing off support, then I keep on adding a position to my focus trade. I may or may not be picking any little shorty giblet trades the counter direction. I definitely, if the thing is bouncing off of support, price is bouncing off support, and then it breaks through support, that means it's not on its way up anymore. I want to get in short. Okay. And so basically I can just trade both directions. And generally what's the market do when it goes up? It goes down. And so I'd like to capture both directions. What's the market normally do when it goes down? It goes up, And unfortunately here, the thing did not really go up, right? I would have captured a bunch of short here. Not a whole lot of range to work with to capture the giblets out of. I did actually make a little bit of extra ticks on the short side compared to the long side that was losing all the way down. The thing is, though, is that at some point I think I've got to basically just pull the trigger and get out of the long. And where I would get out of the one side and let it ride, right? So if I can just get out, let's say out of this whole position right here. So I'm going to be long for this whole position until it tells me not to get, out. And I'll tell you how to work that all the way down. If I can just skip like all of this, like 40 cents right there, or maybe 60 cents, okay, without a long trade on, then all that profit right there is going to counter, not only counter, but it's going to actually boost my profits compared to the cost of this trade. And I always consider the cost what I lost, right? So if it was 5 ticks before it hit my stop, that was the cost of the trade, right? Or if I had to hold along all the way down here, right? And then I didn't make anything on it, right? That's the cost. But then I countered that with a short, and that's the hedge. I did wind up making more short ticks than long ticks that lost. Okay, so there's a profit. Now, where I really got to cash in at is say, okay, look, this thing is selling off here. This is a mess. I don't see any indication that this thing is going to reverse here. I'm going to just get out of this long position. I don't know where I'm going to decide that at, but normally it's right at these support levels. If I've broken through 2 support levels, here was 1, here's 2, and then it breaks through there, I don't want to be in a long position. I'm expecting this to go down another leg or 2. So I would prefer not to be in a long position, especially not one that's going to take me all the way down to the next leg. And look, this was a very long leg. So getting rid of that long position wound up being a very profitable trade. Not having a position in a bad position where the market's going against that position is a profitable trade. Sometimes doing nothing, technically, in business means profitable business, because if you do the wrong thing, you're losing money. So what's better than that? Not losing any money, or not making money, just so happens to be more profitable than losing money. So you gotta be basically you have to be interchangeable in your way of your understanding of negative numbers and positive profitable numbers. Understand that it's a two-ended sword, right? And that the handle is also the blade, but at the same time, if you can sheath the handle, right, then you can't lose anything on that. Okay, so I'm still working on how to explain that very quickly, but it goes back to that cost saving and hedging duck foot, the other foot, right? So now that foot works here where I save costs, and I realize that we're breaking through yet another support line. So I definitely don't want to hold on to a long here all the way down here. Where I'm going to get into another long is I'm going to look here. And then maybe look here. Maybe. Okay. But I'm going to start looking right here because I had this big bounce here. It's a quick tail. It's 3 bars in, but it's 40, 60, about 80 cents down. 80 cents down is pretty big in the CL. So, I'm going to be looking for long down here. Plus, it's in that time of the day, In the time of the day, basically, you're running out of volume, right? So, basically, whatever's trending, it can't really trend very much farther normally. So, you're going to look for the counter trend. And so that's why I'd be looking at that down there. Okay, but then I captured, what I'd do is I'd capture this. Now, how would I do it? Oh, I don't know. I guess I would capture a piece of this, and then I would say, okay, it looks pretty darn bearish here. So I think what I'll do is I'll put in I'll do this. I'll show you what I actually do. So price runs down right here. Okay, right here. And then it goes back up. Now, this is a different market, but whatever. Then it goes back up, right? So runs down to here, and then it starts to go back up. Well, I captured profit down to probably right there or whatever, and then it runs down there. Okay. Now, what I'm going to do is I'm going to put my next short order just 2 ticks below where it dropped to, wherever the low was at. I'm going to put 2 ticks outside of that. So that way, if it breaks through this close right here and it continues on down, okay, then I'm going to capture that and continue on down. If it breaks through and then it goes up and then it comes back down and it breaks through again, I've got another order there just in case, because that's what it does, right? Look at this. See, this is very common. The bar closes, opens in another bar, rushes up, and then rushes back down again. Well, but sometimes it doesn't go up and then back down, right? So 2 times. Stick to the same tick 2 times. And if it's trending, it's going to give you more than what you lost, okay? You got to be interchangeable and amiable about that. Sometimes these things are moving so fast. Sometimes you just got to let it go and wait for something else to happen. So maybe I'll just profit on this and I'll just wait until it bottoms out and then I'll take another position. Or maybe I'll do this. I'll just trade the closes of the bars. I'll just add another short, right? So I take profits, then I add another short. If it breaks through that and it continues low, then I'll wait until it gives me some more profits, and then I'll say, okay, that's enough. And then if it breaks lower than the last low, then it'll trigger my short again, and then I'll take profits again. And then if it breaks lower than the last low and it triggers my short again, then it'll keep on doing that until it doesn't do that anymore. Now, if I get into one and it starts running the other way, then what I want to do is I want to get in long. So let's say that I get down to here, I take profits, and I get in long. Let's say I do get in long here. Well, now it runs up and then it starts running down. So I've got a long position here, but then I've got a short position, so that if it breaks this, let's say this is my support. Now, if it breaks that line, it's breaking lower, then I want a short position, okay? And so now I've got a long and a short. I've got a long right here. I got that higher low right there, and then I got a short right here. It's that time of day. I'm going to go ahead and hold on to the long. I don't think it's going to do another one of these doozies right here. And then the short can make money. I take profits right there. If it breaks any lower, okay, then I'll just get back in, right? So if it dipped down to here, right here on the chart, dip down to here. Okay, then I'll put 2 ticks out there, lower, or maybe 4 or 3. And so when it triggers another short, then I'm in hedged, and it's hedging against my long position. On my long position, I want to profit up here. Right? And so basically, the thing runs up. I'm not going to take profits on that long yet. Okay, what I'm doing is I'm holding on for up higher. Then it comes down here, and basically my other chart, my heat map, shows me that, I remember this one distinctly. It shows me that the thing is double bottoming, and the thing is reversing. Right, we got a double bottom here, and then actually in this bar it double bottomed. And so with the combination of that, the time of the day, the MACD turning over bullish here, the volume delta has become dominated by bulls, not bears anymore. It's getting closer to the close. You got shorts holding on for most of the day. They're going to start to buy to cover. They can't hold overnight. They won't. So you're going to have a lot of buying right here. I knew this thing was double bottoming here and here in the same bar. Everything was looking up. We've been below the 34 EMA for too long. Too far. It's moved too far. People got to take profits. They got to get out of this market. It's not going to run on down, I don't think. So I would buy that, right? And so, and actually where did I buy? I bought right here. Okay. Then at double bottoms, I buy another one. Okay. Remember though, I profited on this short move right here. Okay. This one actually knocked me into a short. Okay. So now I'm holding on to a short. Okay, but then look at this. It gives me a quick tail and then it moves on up. So I got higher lows, so I'm not going to hold on to that short. I already know what's going on. I'm out of it. Okay, but I also bought a long. So I'm doubled up now from right here to right here. Now this long makes up for the loss on this long up here at this point. But this is that breakout. This is that where the bear trap is, and then it's going to short squeeze up. So basically, but I've profited on this, so it's not really this isn't really a loss. But now I've profited on this, and I profited on this move, and I'm up here. I get rid of this contract, and I entered down here at the double bottom. That's where you want to be. You don't want to be up here, because if this thing does reverse, you entered down here. So if it comes back down here, you don't lose anything. But if you take profits, you want to take profits up here. So you take profits from here to here, right? So that's how that works. The higher trade gets knocked out when it comes back up to even, and you're pretty sure it's double bottoming. Now you're in lower, right? You don't want this one. If you can get in lower, you will get in lower. That's what you want. Now, if this goes wrong and it continues on down, right? I'm not thinking it's going to go very far, much farther, because it's already so late in the day. The volume's so low and everything. So I'm going to hold on tight. And I did put on another short right here. But then I got out of it when I knew it was reversing anyway, so I knew it was pointless. Okay. So it did knock me into another short. Now that short, if I've got, let's say, 2 contracts or 2 pieces long here, and then I've got 1 short here, okay, what I can do is I can size down. So once I can say, okay, once the loss starts to become in the one side this much, then I'm going to scale down. So I'm going to take off a contract, or I'm going to take off some of my contracts. So I start to scale down, and I'll let this thing traverse just like right here. So when I jumped out completely right here, out of the long position, I was just 1 long, and I jumped out here, what I'm going to do is going to let the price travel without me long in there and traverse the chart until I can see where I can get in long again. And then I know that, they're not going to go they're not going to go much lower, and then I can work with that. But the thing is, though, is if it is running, you can scale down. You don't necessarily have to. I wouldn't at this time of day in this position. You can't scale down to 1 contract or fewer contracts. So that way you don't have as much money to make up for. And then you look for the bounces. You read the, the rest of the stuff is basically you're going to have to know the crowd You're gonna have to know the time of day, the market. You're gonna have to know, what's the bigger picture, what's on the daily chart. Just basically what's the conversation in the crowd, and so where things can run to. If they can, they might. If they do, they've probably already ran too far. Can they continue to run? Probably not. Then you can position yourself accordingly. Rarely is it going to go badly if you're doing it this way like I'm talking about. I might do another example with more detail, drawings. But normally it's not going to go bad. If it does go real bad, it's not going to be such a big deal, right? Normally you can tell where they can and can't go. And if it does go that way, then you can prepare for it. Like I'm saying, you can do the exact opposite trade. And that's what I like. That's a real sport. It's not as boring. You understand? It's kind of fun. you know, keeps me into it. But the thing is, though, you got to concentrate a lot. You got to constantly do this math in your head, and what am I going to do if I do this? What am I going to do if I do that? How am I going to balance? I got to constantly balance the checkbook, right? And I've got to constantly think about how I can balance it. And so the thing is working over and over and over. I'm looking at all these different charts and everything. So usually about 2.5 hours or so of steadily going on it. That'll kind of wear me down. And then basically I know when I'm kind of worn out, I need to just jump out of the thing and not do it so much, because I start to feel the fatigue in my head. It's where it's not clear anymore. If it's not clear, I need to land. You know what I'm saying? Like, I used to be an athlete. I'll just kind of explain the zone a little bit to you. I used to be an athlete. So I was a pitcher. And if I could see it in the zone, right, then I could hit the spots with the ball. Okay? But if I couldn't see it, I couldn't hit it. And it's the same way if I'm just throwing garbage in the wastebasket, wadding up paper or whatever. I gotta wait until I can see it. When I see it, it's locked on, it's a sure thing, and I can slam the thing in there. I don't have to toss it, give it a little tossy or anything. I can throw it straight in there and hit the back of that thing, right? It's a slam dunk, or, it's a done deal. Not a slam dunk, but it's basically the same thing for me, because I slam it in there because I can. There's a game called... Now, I'm not a big drinker or anything, but I had played this game one time at a get-together, and it was called Pong. And basically what you do is you got a long table, one of those, banquet tables. They fold out, the legs fold out or whatever. And then you make this triangle, kind of the way that you set up a rack of pool tables, and it's cups. And basically the cups got beer in there. Then you stand at the other side of the table, and you got to toss these things into the cup. What I realized quickly, though, even though I was mildly inebriated, was that I could actually get the zone. I knew. I tried it. I tested myself. I could see that the zone wasn't on. I wasn't in the zone. I didn't hit the cups or the cup. And then when I was in the zone, I could tell, and I could hit the exact cup. I could throw from the other side and hit that cup, the one I pick. And so then I could just continue to win. I didn't have to drink as much. The other side had to drink more. I win, blah, blah, blah. And it's the same way when I was in the arborist business, I could go out rock hopping and cliff climbing and things, and I could jump from rock to rock. I mean, these were insane jumps, with a waterfall, 300-foot waterfall just off the way. If I fell off the rock that I was jumping on, I would get stuck in that undertow and get pulled over the thing. But I knew that I know my stuff. If the zone hits, I've got it. I know the limitations. I know the distance to the increment. It's just all in my soul. And it's something weird. You just know if you got it, and you know if you don't got it. That's just what climbers have. That's what athletes got. That's why they don't die doing everything they do. And So it's kind of like that in this trading. I've got it. It's in my zone. I can go hours and hours, but then when it stops, I can't see it anymore. Okay, I know that I'm just getting burnt out. And so what I need to do is I need to get out of it, because I'm not going to be able to see my spots anymore. I'm not going to hit my targets anymore. I can't balance the book anymore. I need to take a break, try it again the next day, or come back in an hour or two or something. And it depends on how early in the day it was. I can look at other markets and see if there's other, what kind of rating they are, and if it's a good rating, if the charts are set up so that way I can make a profit on them, they're setting up, then I can get involved there, right? If I've given myself a break, I'll just start trading it, and then see if once it starts happening, it's like a sword fight. It's like I get into the sword fight, right? And then if I'm constantly defending, and everything's switching for me, I'm in the zone. I'm setting everything up so that way, if I get attacked in this way, I'm already set up. I've got a counter to that, and then I've got an offense too. And so if it's setting up in my mind and it's working and everything's working, then I'm fine. I can go at it again. I'll go at it another hour. Okay. But then if it's not there, though, I need to get out of it. If it's not setting up and it's just like, it's running away with me, my mind is just not into it, then I get out of it. I'm not in the zone, right? So, and these are expensive. These are expensive, right? I mean, we're not just talking about a couple $100, folks. This is, a lot of money. If you get caught on the wrong side, you can cost yourself quite a big deal. And if you got reputation on the line, then it's even worse. So that's how it is. I don't think there's much else to tell you. I mean, it's just basic financial structuring of the trades. There's two kinds of ways that I do it. Basically, it kind of depends on what the chart's doing, how I feel, right? What's my zone telling me? That's what I'm going to go with. If I'm wrong, I'm set up. I'm already set up because I'm already figuring out what am I going to do if I'm wrong. And then the charts are going to tell me, They're going to staircase one way or another. When the thing wants to reverse, it's going to tell me when it's going to reverse because it's not staircasing anymore. Okay? I know when too much profit is too much profit. I know when too much losses means that it's going to continue to go that way, right? Because it's not enough profit for the other side of the trade yet. It's going to go more. Okay? So, and that's just reading the crowd. I know how to read the crowd. I know how they do it. I know what they think about it. I know how they feel about things, right? It's like, you know what's okay with the crowd when you're in a crowd. You know what's too much. What's too much in a crowd, right? You don't go there. So, and then, if you're a business person or maybe you're a performer, okay, how far you can go and still make money. That if you don't go anywhere, you aren't going to make any money. But you got to do something. Once you get into it, about where you've gone too far. Like this right here. Look at this big move. Down, 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 step, step, step. You got those steps, few steps, and then you've already gone too far, right? But it's not far enough. If you're long right here, you don't want to be long because you got such a good move here. It hasn't broken away from the 34 EMA greatly yet, right? So if it does continue, it's going to be a big doozy, okay? So you don't want to be long there. You want to be short there, and definitely short on this side of the support line, okay? But then it's down here, right? You got this huge doozy. It's not just 1, 2, 3 steps. It's a huge doozy right here. It's way below the EMA. It's late in the day. Right? So that's already too far. Right? You don't want to keep on going short. Don't have a lot of hopes going short. So you don't want to start building a short position until you break out of support. Okay. You want to start to look long. You want to start to build a long position, right? You want to get back in. Where's in? In is this line right here, the 34 EMA. Right? Too far away from it means you've gone too far. They've made too much money this way. They've made profit. They're going to take profit. They're going to head back this way. Same thing with the other way. If it's gone up too high and it's too far away from the middle line, they're going to take profits. They're going to walk away from the market. It's going to come back to the in line, right? The money line. So, review these kinds of videos. I know I am not the best speaker. I know that sometimes I kind of sound like I feel like I sound like Stone. What's that guy's name? Stone on the Alex Jones show. Sometimes I kind of talk plainly like him. There's another one that he's got the Financial Turmoil channel on YouTube. Sometimes I feel like I'm talking like him. He's Canadian. Small town Canadian. So, not the greatest talent there, but I think I spoke clearly. I've got the EQ and everything set up pretty well here. So it's not all staticky. It's very clear and robust. And if you miss something, you got to go back over it. Sometimes what I was doing when I was learning was I would just go back over videos. All right? And, a month down the road or 2 months down the road or whatever, and then I would go back over them, and then suddenly they would mean so much more, because basically the first times you go over something that's new to you, you're just learning the vocabulary. Then you try to fit it with what you're doing, right? And then when you go back over it again, you've actually seen it a little bit, you know the vocabulary. Now all the concepts come to you. It's like a vision. You can see it clearly in your mind. Now the concepts are coming to you, so you learn more the second time you go through it, because the concepts are congealing. The small concepts form the big concepts, so now you're getting the bigger picture. Then you work with it some more, and you go over it a third time, and so the third time the whole picture comes clear to you. Now if you can actually focus and stay attent, right, that's the best way to learn these things. Just find the good videos. You might not get everything the first time, but you got the vocabulary. Even though you forgot what you learned, the vocabulary is in your mind. When you see the video a second time, or you go to start trying to trade again, those things will come back up. Even though you don't remember them, you'll just be reminded just by seeing the charts, seeing the situations, and then hearing it a second time. Okay. And so that's always the case. Even though you think you don't remember what you heard the first time, it's still in your mind. Okay, you still captured it. You just got to go back over it a few times, and then Viola, you're going to start to speak this language. You're going to be able to, talk the talk, right?